Hi and welcome to the Market Alert for Monday, the 11th of January 2020. There is a lot to get through today. It's going to be a very interesting week as well, of course, last week for Trump's presidency. Thereabouts, 20th, I think Biden takes over. But on Friday, stocks, bonds, yields and cryptos soared amid payroll plunge, which was really bad, which I'll look at in just a moment. Damaged democracy and Biden's trillions. And as it says here, from the worst start since the dot-com collapse to the best week for small caps in over 30 years. So here we're seeing that stocks managed to move higher as crypto soared and the payroll incredible, as you can see here. We saw 140,000 jobs lost. You can see that we're going back into red. You can also see the downtrend, something I've spoken of many times before. And as it says here, just as we warned, this is the dead cat bounce in jobless claims here, and now it's a case of heading back down this way, particularly now this man's going to be in office. The price will be high. Biden calls for trillions in stimulus, having just handed out 1.4 trillion between Christmas and New Year. There will be trillions printed, and of course that's going to create all sorts of problems, devalue the dollar, which is already having a bad time, and see the precious metal sector start to really take a move and hold this year. Also here, as Peter Schiff says, we don't get any government for free. Absolutely not. Everybody in America is going to be impoverished to a degree by these failed policies, and by God, we'll be able to see the printing presses smoking this side of the pond. Also talking about controls, because that's another thing that's going to come with the Biden government and the global hold with the WEF. Bitcoin holders barred from depositing profits in UK banks. And I thought about this on Saturday. I've got Bitcoin that was with BitMEX when I was trading the futures, and that was being banned by the FCA. That came into effect on the 1st of Jan. All derivatives associated with cryptos were banned, so I had a few quid's worth sitting out in BitMEX, and decided to bring that back. And on Saturday I thought, well, look, the silver market is so undervalued, the most undervalued asset on the planet. Bitcoin's gone up 300+%. It was a no-brainer, and it was a good move because cryptos are crashing. This is overnight. It appears the economist curse has worked once again. I don't know what actually means by that, but it doesn't matter. But overnight, you can see that Bitcoin down 15%, 18% for Ethereum, 23% for Litecoin, and 19% for the cash. Now it could just be a correction. It could move higher. But for me, there's no way I'm going to get a 500% return like I had last summer by trading a silver ETF, and that's what I intend to do here. So there's no way I'm going to get that sort of return by staying in Bitcoin or Litecoin. So I decided to offload on Saturday, which you can see. You'll see the transaction there. And that all happened on Saturday. The same with Litecoin, and there you go, there's the date, so you can see. And I was out as the market moved to the upside. It was moving, decided to get out. Always sell when the market's moving to the upside. And talking of the upside, well, we've got some interesting things going on with the implied volatility as well. We are due a correction in this market. You can see down at 1712, not as low as, of course, we had over here before we had the virus turn up last year. But considering the last low was down at 18, we're at 1712. Maybe that is the new base for the implied volatility, as much risk as the option sellers want to expose themselves to. So, it's starting to look a bit precarious for the stock market, due for a correction. I would expect a bit of a rally once Biden's in, of course, but then that honeymoon is going to be short-lived for me, unless they keep, the money that they're going to be printing, unless it finds its way to the stock market. Depends how much of a socialist government it's going to be, whether it's going direct to the people or it's going to the bankers, given that Hank Paulson is going to be on board, even though he's in charge of the environment. But Yellen coming back, well, it says it all, really. She's just Wall Street's best friend, she is. as the Munchkins been, as well as Mnuchin giving 4 trillion to the banking system in March of this year. Of last year. Today news, we've got, not talking of criminals, Lagarde speaking today. She's speaking at 2:40, and tomorrow we've got Bill Bailey and Lagarde again on Wednesday with a couple of other news items there, CPI and core CPI. Thursday we've got the unemployment claims and Powell's out, so it's all of the central bankers are out this week speaking, and on Friday we've got retail sales from the US. So every day we've got some news this week as well. But also keep in mind, of course, that Trump could do anything. Anything could happen this week. Simple as that. It's the best view to take with regards to Trump and what happened last week. And just one thing I forgot to mention, if we go back to here, about Bitcoin holders barred from depositing profits in UK banks. This isn't cast in stone yet. It's something that's coming, but there is a way around it at the moment, and that is if you send it to your PayPal account. At the moment, there's no fees, and then direct to your bank account. That's one way around that. Shouldn't be broadcasting that, I suppose, but hey, why not? So just keep that one in mind as well. So if you're with HSBC and you're trying to deposit Bitcoin profits, they're going to take a very dim view. As it says there, they're barring people. This again just goes to show you the controls that are coming, doesn't it? Can't trade the futures on Bitcoin unless you're trading through the CME, but you can, and you can't deposit the profits now. Something else. So they're trying to get rid of the cryptos because the government have their own cryptos that they're developing, all central banks. They want full control. The idea of letting Bitcoin run is to get it into people's psyche that cryptocurrency is the way forward, so you'll be more accepting of it as opposed to the older standard that's been around for millennia with coins and cash. So just keep that thought in mind. Okay, let's have a look at see what the markets are doing overnight. Let's start off by having a look at the Dow. We can see we've got some weakness here. Like I say, I'm expecting a bit of a volatile week. We could see a bit of a correction because nobody knows how this week's going to pan out. So off the all-time highs at the moment for the Dow overnight. This will be leading the charge this week in either direction. But at the moment, price is back to the 5-bar moving average in the daily chart. If you are trading the Dow, then my advice would be to draw up from the recent low to the recent high and get a set of fibs so you can see where the market is likely to trade to these points before it trades down to the 20-bar moving average, which is the 62% retracement. And I would do exactly the same as well with the German DAX, which also is showing a bit of weakness at the moment. We've got the all-time high, which we can see is here. Let me just draw this in for you. This was put in on Friday of last week. It was a struggle, a very choppy session. But let's have a look, see where the market could pull back to, which, again, we've got this block of fib retracements here. Got the 5-bar and then nothing between the 5-bar apart from the lows of the previous days. But in between this, of course, you can see that we've got the 50, 62, 78% and 89. And it may be worth just transposing these into the smaller time frames that you are trading. Not saying the market's going to move lower, but given this week, anything could happen where they'll bring the market back. I would expect a rally once Biden's in, because it seems to bring some sort of, if you think about it, a bit of calm and whatever to begin with. But with all that money printing that's coming, and it's going to come by the shed load, then it's going to be a real problem. For me, it's the calm before the storm, and the implied volatility is also indicating this as well. So overnight, let's have a look, see we are January the 11th. The market's moved lower. Just having a look just to make sure I've got the right place. 10th, Sunday night it started at 10 and it just moved down. And then we kicked off just after midnight below the DP level. And price is driving through the 200 there. Then that's become a resistance, which you can see there. And prices have traded down to the 14,000 level. Now, this is interesting, isn't it? Because what we're looking at here is for the market to hold at the 14,000, which it did here. So we want to see, and again here it came back to 14,000. Broken it since though, as we can see here. So the goal first is going to be to get the market back up to 14,000. You can see as we got down to 13,950, massive volume there, and then tested, and then the buying coming back in here to move the market to the upside. Just drag this across and reset it. And if you have a look in here as well, from here to here, you'll see that again we came back down to 62%, where the market then moved off. Prices have moved up. You can see there we stopped with this volume here, and prices just sideways now. So probably be an interesting kickoff with the futures market at 7 a.m. trying to move prices back above the low, and then of course just above that we've got the 14,000. They'll do the best to get back to that level, that's for sure. Yeah, that's how I would see that play out, and you can see where we are there at the moment. If not, and the weakness comes in and they want to shake out, I mean, there's always the prospect that they'll tank the markets this week so that Biden prints as soon as he gets in. Who knows? Like I say, we're in unknown and uncharted territory this week, given what happened last week with Trump and his following his speech outside of Capitol Hill. Okay, that's it for part one. In part two, we'll take apart Friday's trading session, and if you're interested in that, I'll see you there. Otherwise, as ever, thanks for watching. Okay, in part two, we're going to have a look at what the market did during Friday's trading session. You will see that I've be drawing fibs on the charts as we go along, just to highlight how powerful these are and what you can expect to see during these levels as well. So the market was fairly quiet to start with on Friday. The market just stuck in a range even after the futures market opened, didn't really move a lot, and I suppose it's got to consolidate after the big move that happened during Thursday's session. So here we get the kickoff. I'm just going to fast forward. You can see them driving or bringing the market back off the 200 MA there. Very important piece of price action this is, as you will see going forward. So then we've got some selling coming into the market at the R2 because we had some selling over here, and you can see that highlighted down here. So as we go forward, you can see there that what I've done now is marked up the fibs from this high to this low. Got a full selection here. The market's already gone through 38.50, and it also turns out to be a sell signal. And I can see here that I've got the entry price at the 62 level. I'll just make that a bit easier to see. At 62, 78 is in between there and the scalp, and 89 is just beyond the scalp there. So the market starts to move lower. Also note in this bar that the volume had already started to drop off. Even though there's some selling there, it did drop off just a little bit. And then as you'll see this bar complete, you can see the buying pressure coming into the market there. This bar is shows more volume than the previous bar, and the range is less as well. So there's a bit of support coming in there, and it's not surprising really, given that we're at the 62% retracement. However, prices do manage to find a bit more selling down at the 200 MA, just gets down to there and then to the scalp, and I decide to pull the trade because we've got an 89% there as well. So a lot against it. Plus we saw how they brought the market back once prices got to the 200 MA. And there you see prices reversing and then moving back to the upside. And I've just drawn the fibs back on from the upside to the downside, projected upwards, just to see what the market is likely to do as it approaches these areas, or if it does. So the market's left this high behind and started to move lower, so I've just drawn in from this low to this high and projected down this way, just to see where the market will find some support. So prices move lower and then immediately are brought back at the 50% retracement, and then driven up to the original fibs that I had on there. So now we've got the market trying to move higher, but it comes back first, nearly took us out of this trade. A bit like the one we had in Thursday's session, and then the market manages to drive through the scalp, and then you can see straight off. If you want an exit point, you've got it there. You've got the up thrust, the market coming off the high, and the volume is greater than the previous bar, but the range is less than the previous bar, which is far wider. So they're selling it in this area. So the prices now trade sideways. Have a look to see if we can get through the recent high, and then as we get to the 5-bar moving average, it's a case of getting out of the trade. And then I've just drawn the fibs in from this low to this high, just to see where we are on the downside, see if we get any support in these areas. And then prices put in another sell signal, and again you can see prices going to the 200 MA. And immediately coming off this, and again you can see this happening here and here. So the other thing, of course, is they don't want the market down. They'll do everything they can to actually try and hold it. So at this point I thought, no, we're likely to be moving back to the upside and exit this trade. And then a bit later on you can see that the market's sideways, and I've got a few fibs drawn on there, but then the market became really quiet, so I decided just to remove them, and then you can just see there the market sideways. And an interesting bar here though, you've got the MDI is red, and it comes back to the 200 MA. It's on the downside of it now, closing below, and prices move slightly lower before they find some support, and you can see it in this bar again, subtle, same volume as the previous bar, but less. Sorry, in this bar, the tiny bar, you've got the volume is greater than the previous bar. Buying pressure basically is what you've got there. So I'm going to fast forward, because the market traded sideways from this point back to the 200 MA there, which you can see, and then trading sideways. The market was waiting for the non-farm payrolls, which we've already seen, with prices, or rather with the figures being 140,000, far worse than was actually forecast. So then we had a sell signal to kick off the afternoon, but the market was having none of it, and the market reversed, and again you can see there we managed to get back down to break even, but yours truly wasn't paying attention. I was doing something else. So by the time I got around to looking at it, prices were on their way back to the upside, which is not a problem, because as you'll see, we had another opportunity to actually recoup, which you'll see in just a moment. So prices trading sideways. Then we had another potential sell signal. The market's got to take out this to the left here in order to move lower. That's for sure. And also we've got the R1. Prices trade through this. You can see I've drawn that line in there now. We've got some buying pressure coming into the market, and prices continue lower. And at this point you can see that we've made up the loss on the trade. However, again, I waited for the market to come back, and got out, you can see there, around 20 points. So still down on the afternoon, but good trade, one trade in the morning. So now you can see that they've bought into the market here. You've got all of this volume. The bar sticks out like a sore thumb, and then prices trade sideways and then start moving back to the upside as soon as they close back above the 5-bar moving average. On a small increase in volume there, prices then head to the upside. I'm just going to fast forward through the remainder of the afternoon there. Okay, so that's a quick review of the trades from Friday, and yeah, let's see what happens today. It's certainly going to be an interesting week, particularly that it's Trump's last week, whether they can impeach him or not. Like I say, there's going to be some exciting things going on for sure. He's an unknown quantity, so anything could happen. Okay, with that, as ever, thanks for watching. See you in the next one.